Top 5 things you can do with the VA loan, and you're going to want to stick around to the end because I'm going to talk about how to build wealth with it. Number 5 is the VA renovation loan. And yes, we're just jumping right in, right? So for some reason, a lot of people don't know about this. It's been around now for 6-7 years. And for some reason, people just don't understand that the VA loan has a renovation option. Now, the reason is that most lenders don't offer it. It's just not the most commonly used thing. So I'm not going to elaborate a ton on this, but you can buy a house that needs to be fixed up, have it fixed up, move into it, all paid for, 0 down by the VA loan. So it's like the FHA 203K loan, but better. And yeah, it is phenomenal. So that's number 5. Number 4, and this is as of January 1st, 2020, you can buy $1 million house, 0 down. You can actually buy a $2.5 million house, 0 down. You can buy a $20 million house, 0 down, provided that you qualify for the mortgage, right? So you have to have the income and the credit and the debt to income ratio and all that other stuff to actually qualify for the mortgage. But with the DTI for VA loans being higher than 50%, in fact, there's no actual limit by the VA, just by lenders. It actually affords you more purchasability anyway, but I got a phone call once, I'm not gonna name the gentleman, who called me to thank me, essentially, because he had stumbled across one of my articles. Not stumbled across, I think he went and looked on my website to see if there's anything about this. He bought a $2.5 million house in Dallas, 0 down, and he was gonna pay the 20% down payment. So effectively, we saved him a $500,000 down payment. Now, obviously, this is somebody who has some money, is well off, but that's still a lot of money saved, opportunity cost and all that. And he locked it in with an incredible interest rate for 30 years. So awesome. So there is absolutely no limit to how much you can buy on your first use with the VA loan, 0 down. Now, there's a lot of stipulations after that, but the long story short is if you refinance or try to sell the property to your LLC, you don't regain that full entitlement. But if you sell the house, you actually done. Like, you no longer have any ownership interest or trust or anything with that house. Your guarantee is not tied to it anymore. Then you can reuse the 0 down, doing that as many times as possible. Otherwise, it's a one-time restoration. I've got other videos on that. It's a little bit more complex, but suffice to say, 0 down, expensive house, pretty fucking sweet. In that same regard, number 3 is you can use it multiple times. I know somebody who's had 4 VA loans out at the same time because they were affordable enough properties. Now, I also know people who've had one and then they sell it and they buy another, or they have 2, or basically it all comes down to your entitlement. So if you have questions about your specific scenario, I always recommend talking to a lender because it's going to be different for every single person depending on your first purchase price, the new county loan limit where you live currently, and several other variables. So if you're looking to buy a second house or third or fourth or fifth with the VA loan, recommend you talk to a lender, and there's a link down below that, you know, we can help you out with just asking that question. Number 2, you can build a home with the VA loan and it's still 0 down. So yeah, that's right. The one-time close, essentially you can buy land, build on it, and move into it for free. I don't know any lenders who will do a 4-plex this way, or triplex or duplex or anything, but I do know that you can build with like a normal loan and then refinance, cash out refinance into a VA loan if that's the way you wanted to go. But as far as like building a single family house, you can do that. You can even build a barn dominium with the VA loan. So lots of cool stuff out there, and I definitely recommend that you do some homework. And again, you can ask those questions. All right, here you go. Number 1. The number 1 thing you can, and I would say should, do with the VA loan if possible, and this is how you, like, the best, fastest way, I think, to build wealth with it, house hacking. So you go and buy a 4-plex, 0 down, you live in one unit, you rent the other units, your tenants pay for all of your living expenses, and now what you would have been spending on rent and or mortgage, you can pocket to invest, and you're still paying down principal, but your tenants are paying it. Let's say your mortgage was $1,000 a month, that's $12,000 a year that you can now invest. That is, if it's a $1,000 a month market, that might be a down payment on a new house. If it's a $2,000 a month down payment, that still might be a down payment on a house because you're saving $24,000, and $2,000 a month in rent, average home price is probably around $200K. So there's a good chance that in 1 or 2 years, off just the money that you saved in rent or mortgage, you could buy another house with a full 25% down payment, right? And that's awesome. Not only will you learn how to be a landlord, get the tax benefits, benefit from any appreciation that happens with the house while you live there, and be getting to live for free, but you're going to be able to save more money to invest to multiply. And when you move out, that house, if you've done right, should cash flow and pay you to own it while you do the next house. So you can do this more than once. You can rinse and repeat. I know people who've bought several 2 to 4 unit properties with the VA loan. It's phenomenal, and I definitely recommend that you do it. So long story short, guys, with the VA loan, you can do almost anything. The VA has very minimal criteria. If a lender is telling you no, it's most likely because they don't fully understand the VA loan. Or an agent tells you no, it's most likely, or that it's not competitive, that they don't understand it. And unfortunately, it's easier for these professionals to push you to a product they do understand than to learn how to use the VA loan. 5 things you cannot do with the VA loan. Number 5, as I look over at this screen, you can't buy an investment property, right? Like, you can't just go and buy rental properties with the VA loan. Now, there are ways to invest with the VA loan properly, like house hacking. Not going to elaborate too much, but you cannot buy just a strictly rental property, house flip, investment property. It has to be a primary residence. That's it. In that regard, same vein, number 4, can't buy a vacation home or second home. Again, has to be your primary residence. Now, if you move somewhere that you would like to have a vacation home and you live in that house for a while and you occupy it as your primary residence, and then one day you move out, you can still keep that house. Now, you can't just, well, we'll get into this in a minute, so hang on. Number 3, you cannot complete the work yourself on a VA renovation loan or a new build. And I know there are people who get upset about that, but think about it. The bank is lending you money and they're betting on it. They don't want you cutting corners to save money on a property that they lent to. It is not in the bank's best interest to let you do the work. It is not that you can't do the work. It's not that you might even be a licensed VA contractor approved by the system to do renovation loans. But if it's your house, sorry, there's too much temptation and humans suck. So that's what the bank is betting on. You not sucking, or you sucking worse than the other people. Now, that might not be true. You might be better. You might care about the house more. You might whatever, but somewhere along the line, someone fucked it all up. So just deal with it. It is what it is. No amount of whining, complaining, or whatever is going to get around it. So nope, don't worry about it. Number dose. You can't use any lender. Now, that's actually not true. You can, but you should not use any lender. They're not all created equal. So let me tell you how this works. For reference, I am a licensed real estate agent and a licensed loan officer who has never transacted either because I don't care to get sucked into the business of actually doing loan applications. I have an entire team that handles all of that for me, and I've never sold a house as an agent or bought a house as an agent because, again, I don't want to transact. I just want to make some introductions. Yes, I get like a 25% cut from an agent if you use one of them, but they're also friends and they're the best agents out there. Not all lenders are created equal. And here's what I mean by that. When you get your loan officer or agent or whatever, like classes and education and all that shit, they literally just talk to you about like the basics of the program. You have to understand the basics of the program. 0 down, backed by the VA, like how it works, whatever. Enough to not get in legal trouble. They don't teach you the nuances. So the problem with all these big bank lenders or even small bank lenders is if you don't do a ton of VA loans, and that's not what you decide to focus on and learn about, you don't know diddly about it. The VA is very intricate. It has looser restrictions than virtually any other primary residence mortgage in existence. And there's more that you can do with it than any other loan. But unless you read the guidelines or specifically research the VA loan time and time again, and you talk to the underwriters, you're not going to know that. But the problem, and here's the catch, if I'm a lender and you're bringing me business, is it in my best interest for a paycheck to A, say, I don't really specialize in the VA loan, go talk to another lender, or to B, either do the VA loan with substandard service and not tell you that I don't understand it, or C, push you to another loan product that's not as good as the VA loan because I do understand that loan product and I can feel like I can give you better service. Yeah, B or C, right? They will either do the loan themselves and suck, or they will push you to another product and convince you that the VA loan sucks. So that's where we ended up in this world where like agents and lenders are like, the VA loan's not competitive. No, you just don't know what you're doing, and please step aside and let the veteran use somebody who does. Rant over. There's no better product out there than the VA loan. There's not. My buddy Brian Lubin sold a bunch of houses, and the only 2 that have ever come in at appraised value to a seller or to a buyer were both VA buyers. So best appraisal process, best appraisal rebuttal process, Tidewater, and going directly to the VA. It's the only, so my lenders tell me if you're buying a house and there's an issue with the appraisal, they've got like a 60 to 70% approval rating for overturning that appraisal by going to the VA, because the ego of the appraiser doesn't get involved because it goes over their head to the VA. They have like a 0 to 5% approval rating for doing that with any other mortgage product because it goes directly back to the same appraiser who's gonna be like, I didn't make a mistake, my ego is involved. So anyway, I could go on and on and on and on about this, but the long story short is not all lenders are created equal, which is why it took me years to create, cultivate, build, whatever, the right network with a team that I trust. And so nationwide, they do one of 2 things. Either, if they're licensed in your state, they can handle the loan and they're freaking rock stars, or they will make the introduction if it's a state they're not licensed in, to a vetted VA past approved broker. And vetted VA is the #1 training platform for VA lenders who will absolutely take care of you, right? So they will either do the loan themselves, or they'll just introduce you to somebody who's been trained through this incredible training platform where almost nobody passes. In fact, I don't think anybody's ever passed the VA loan knowledge test on the first try, to make sure that you get a proper introduction, right? So that's awesome. If you want one of those intros, click the link down below. I'll introduce you to a lender or agent or both. All right, the #1 thing that you cannot do with the VA loan is intend to occupy, i.e. commit mortgage fraud, right? And for reference, mortgage fraud or occupancy fraud is up to a $10,000 fine, felony charge, right? So like, it could be 2 years in jail, it could be 10 grand, felony, can't vote anymore, can't carry a firearm anymore. Like, you tell me if that risk is worth the reward of buying a house just because you want to buy a house and try to game the game and not live in it as primary, when you could A, live in it as a primary, or B, just use a different loan product to buy said house as an investment legitimately, instead of trying to skirt the down payment to make a zero down investment purchase, right? Go back to #5, cannot buy an investment property with the VA loan. So when I say intend, okay, the clause says you have to intend to occupy the home as your primary residence. What that means is you need to no shit plan on moving into the fucking house unless some crazy circumstances change after you close on it. So like, let's say you're under contract, you close on the house, and then you were supposed to get stationed in Pensacola, Florida, and you close on the house, and boom, you got orders to DC now. They changed your orders. That is a perfectly understandable and legitimate reason to not actually occupy the house. My buddy Tim was renovating a house, and it took like 6 months longer than it was supposed to, and at some point when their lease came up for renewal on their rental property, they just moved into another property. And then they were like, oh, we got a year left on this lease, we can't break this lease, like whatever, and they ended up not occupying that house. They intended to, but it took like a freaking year to finish the renovation loan when it was supposed to be like 4 to 6 months. So they had a 6-month lease, then they had to sign a 1-year lease. It was just this whole thing. I've got 2 other buddies who bought a triplex together, and then it had 3 units, and one of them was occupying, was going to be vacant the week they closed, right? It was supposed to be vacant, and the tenant was moving out, and no big deal, right? That's legit. You can have a VA loan as long as, on like a triplex or fourplex, as long as one of the units is unoccupied or will be unoccupied when you get there, so that you can move in. This was in 2020, and guess what happened in California? COVID, right? I mean, it happened everywhere, but in California, good luck evicting anyone. Total moratorium on it. And so this tenant didn't want to move out. Changed his, he was like, oh no, I'm gonna squat. And they spent like 8 months trying to get this dude out of the house. Never could get him out of the house. And they ended up just selling the house. And they profited on it. And they never moved into it. But you see, what all of those have in common is that they wanted to live in the house, intended to live in the house, and then something crazy happened. And there are other situations, right? Like if you buy a house that's like a 2-1 or a 3-2, and then you have twins, and you already had a kid, like whatever, you might need to upgrade to a larger house. If, let's say you buy a 2-story house, and then you have a work injury and you can't go upstairs anymore, you might need to move somewhere else. Like, there are legitimate reasons for being able to buy a house that you either never occupy or don't occupy for long. But what all of these have in common, every single one, is that you were not planning ahead of time for a reason to move out of the house. The moment you have a plan, like, well, I'll just buy this house and then we'll have a kid immediately, like we're already pregnant, I'm gonna buy this house and then I'm gonna say, oh, we had a kid, we need a bigger house. Or I already have orders to PCS out of state and I'm gonna buy a house here knowing I'm already moving. Like, it's one thing if you don't have orders and it's just the rumor mill, because that shit can change all the time. But if you have orders in hand, you're not gonna be able to, like, you can't legitimately say you intended to occupy the house if you're like, oh yeah, I have orders to leave in May, let's buy this house in March, knowing we're leaving. Like, those games are what's called mortgage fraud, occupancy fraud. You never really intended to occupy the house as your primary residence. That wasn't your purchase reason. You were trying to game the game, get yourself a rental property for zero down. Now, I respect the hustle. I get it. And there's gonna be all these comments in the whatever that are like, oh, but Dave, I get it. I respect the hustle. It's not worth the risk. Going to jail, losing your rights to vote, carry a firearm, being a felon, to buy a fucking house? Are you kidding me? I love real estate. It ain't worth that. I am not gonna open my drawer to say I love my because, YouTube will probably be like, ban your video. I definitely don't have anything that would look suspicious in a constitutional carry state where I would conceal while I'm walking potential properties in crack neighborhoods. Definitely don't. So forget all of that. So that's the bottom line here. It's not worth it, right? And they do catch people. Now, is it often? No. Are they gonna like check on your house all the time? Probably not. But if you miss a mortgage payment and they find out, not good. Like, the VA does catch people. People do go to jail for this. People do get the fine. People do get the felony charge. It does happen. It's not worth the risk. Just buy a house that you plan on living in. So that's my number one, right? That's my rant. Why the VA loan is the best primary residence mortgage in the world. Right, so the first thing, interest rates. They're better with the VA loan. They just are. And there's a couple reasons for this. One is loan level adjustments. So a VA loan won't adjust on your interest rate for the first time until you get at 640 or lower credit score. Whereas FHA, conventional, and other primary residence mortgages will adjust 3 times before they hit 640. So if you have a 800 credit score and I have a 650 credit score with the VA loan, we're gonna have the same interest rate. And if you have an 800 and I have a 650, I'm gonna be like a half to a full point higher interest rate than you on any other mortgage product, which does 2 things. 1, it means your payment's higher. 2, it means the amount of home you can buy is lower, your affordability. Also, VA loans have a half a point lower interest rate out the gate on multifamily. So FHA and conventional loans, you get penalized for buying a duplex, triplex, fourplex. You'll have like an extra half to full point of interest, whereas with the VA loan, you don't, right? Now, also the VA IRRL, which is interest rate reduction refinance loan. So like in today's environment, that means that if rates drop over the next 6 months, 210 days or 6 monthly payments by the time you're eligible. So let's say a year down the road, rates dropped all the way down to 4%. You could just file a piece of paper and refinance. You don't have to live in the home anymore by then. You don't have to have your credit checked. You don't have to do an income verification. You could have the house rented out and be totally jobless and still refinance and lower the rate. You can't do that with any other mortgage product, and that's incredible. So I love that. Also, just to prove my point, somebody I was coaching yesterday just locked in a house with a VA loan at 6.55%, and you're not getting that on most loans right now. So, and they had good credit. All right, so with the VA loan, you can do a construction or a rehab loan. They're not necessarily the easiest things. Most lenders don't know how to do them with the VA loan, and so lenders will tell you they don't know how to do it, or they won't tell you that. They'll tell you it doesn't exist, but that's not true. They just don't know how to do it. Those are both things with the VA loan. You can do a renovation, like an FHA 203K, or you can do a construction loan where you build a house. Both are possible with the VA loan. Don't let somebody talk you out of it. If you have issues finding someone, hit me up. I'll introduce you to an agent lender that can help you with that. Oh yeah, you can use the VA loan multiple times. Now, I know people for the most part know this by now, that you can use it more than once. As long as you're within your entitlement. I have a friend, Naaman, who owned 4 houses with a VA loan all at once, and they were just low enough in purchase price that he was able to pull that off. That's not really the case for everybody, but you can do, like, let's say you hit your entitlement, you can sell all your properties, restore your entitlement, and go again, or you can refinance them all into conventional loans and do what's called a one-time restoration of benefits, and then you can go again. But I'm not going to go too much more in the weeds on that. What I normally tell people is after your first house, when you get ready for your second, third, talk to a lender, and again, I've drop a link down below for lenders you can talk to that I recommend, and they are going to be your best source for figuring out all the ins and outs about whether or not you can buy another house and how much you qualify for, because it really does vary every situation based on purchase price of the first house, purchase price of the second house, and your county loan limits, where you live at the moment, where you're buying, all that stuff. And so it's just a variable. It's beyond the scope of this video. So let's see, no mortgage insurance premiums or private mortgage insurance. That's MIP, PMI, which will exist on any loan you pay less than 20% down on other than the VA. So FHA, conventional, USDA, any of those, you're paying MIP and PMI, and they cost a fortune. For example, I was paying $81 a month on a $79,900 duplex that I bought in PMI, and that was after paying the MIP. But that PMI was $81 a month. The VA loan, it would have been nothing. And even with the funding fee that people rant and rave and they like to pick it as the one negative thing about the VA loan, that would have been like $11 a month instead of $81. So not even close. It's like $11 a month for every $100,000 you borrow is what the funding fee comes out to. It's actually like $10.5 now because they lowered the funding fee, so it's actually like $10.50 instead of $11 for every $100K that you borrow. That's nothing compared to all the other PMI stuff. And then on top of that, that's waived if you're a Purple Heart veteran recipient while serving, or if you have a 10% or higher disability rating once you get out, which most people do. And before you go off in the comments about how corrupt the funding fee is, and oh my god, no, the funding fee is terrible, and you focus on the only negative thing about it, the VA wouldn't be able to stay open and keep this product alive if they didn't have that, because they have to pay all their employees for processing loans and backing loans and the whole system. So that's how they do it. So it is what it is. Still better than any other product in that regards. Oh, it's assumable. So you can assume a VA loan, and you can actually have a non-qualified VA user assume the VA loan. You just lose, you don't regain that entitlement until they pay off the note. But as a veteran, I could assume a VA loan, no problems. I mean, it's a long process. So I say no problems. It's a complex, lengthy process, but it can be done. The appraisal process for the VA loan is better than the appraisal process for any other mortgage. So with a VA loan, the appraiser can do what's called tidewater. Basically, they can give you 48 hours to say, hey, provide me with comps if you think that your comps will sway what I'm going to put down on this, because I think I'm going to come in low. That's not normal. And then if they do come in low, you can go directly to the VA and be like, hey, here's the comps we found. We don't think this is an accurate appraisal. And I'll tell you that my lenders I work with say they see like a 5 to 15% approval rate on turning over appraisals with other mortgages, and it's like 60-65% with the VA. Incredibly higher likelihood, and there's actually a way to rush that, and that might even improve your chances, but that's like a case-by-case thing. But the reason for that is that if you, like a normal appraisal, when you say, oh, I don't think this is right, here's all my comps, it goes back to the appraiser. And then they're like, oh, you don't think I know how to do my job, like their ego's in the way, all this stuff. It's very rare for them to say, oh yeah, you're right, I messed up. But if you go through the VA, you just go straight to the VA, and that appraiser never even knows that it happened, which is pretty sick. There's not a debt to income requirement. So like FHA, conventional, all this stuff, if you break 49%, so like once you hit 50% debt to income, no go on that loan. I've seen someone close a VA loan with like a 78% back-end DTI. I'm not saying I recommend that, but it's doable, right? There's also no credit score requirement. So I've seen people with the VA buy, 540, 580 with the VA loan, and you're not going to see that with most loans. So also no credit. And here's the thing to remember: when you're working with all these lenders, if a lender tells you it can't be done, ask where that's shown in the guidelines. Because a lot of times, like, this is why it's so important to work with lenders that really specialize in the VA loan, because most lenders don't specialize, they just like learned a little bit here and there. But if you truly specialize in the VA loan, which is why I say just go click, talk to the lenders that I work with. They're more knowledgeable than anyone else. They run a training program called Vetted VA. They're incredible. And if a lender tells you that you can't do something with a VA loan, I'd say 9 times out of 10, 8 times out of 10, it just means their bank won't do it. And rather than saying, our bank won't do that, go try this one, they're just going to say you can't do it. Because they, maybe not ill-intentioned, maybe they just don't realize that because their bank has an overlay that says you can't do it, other banks still can. Which is why you got to know what's in the guidelines, vice what the bank is telling you. Because if it's in the guidelines, okay, yeah, you can't do it. But if it's not in the guidelines, it's fair game. Like, there's no credit score requirements. So you just got to keep asking around until you find a lender who will give you a loan. Because they can. The VA will back it, which makes it safe for the lender. As long as the lender doesn't have a minimum credit score requirement that they overlay on top of the guidelines from the VA. So I tell people all the time, whenever you run into an issue where you're not 100% sure if the lender's being honest with you, ask about and check the guidelines. And if that doesn't work, come talk to one of my lenders and they'll square you away, because they're the best. So it's easier to qualify for a VA loan than like anything else. In fact, I'm gonna mess up all these numbers on it, but I mean, it's absurd to think, like, I think it was like every 100 people that applied for the VA loan, like 40 something bought a house last year. So like that means 60-70% were qualified, and like 40 of them actually bought a house. I mean, it was a crazy number. I don't remember the exact stat. I'll have to go look. It was at a conference I was at with the actual VA, and it was phenomenal. There's all kinds of stuff you can do with the VA loan. Oh yeah, they count 75% of the gross income of your tenants towards your rent. And if you don't have the 2 years experience as a landlord, just hire a property manager. So the VA guideline actually just says you have to have a likelihood, like a high likelihood of success as a landlord. You don't have to have experience. Someone's telling you have to have experience, that is a lender overlaying that. Again, so just hire a landlord or go find another lender, because you don't have to have experience. You just have to have a high likelihood of success as a landlord. I would say any service member and veteran has a high likelihood of success as a landlord if they put their mind to it, because you made it through all the crap that comes with being a service member and veteran. Being a landlord's not as I don't actually know which one's worse than going through like boot camp and getting shit on, or dealing with tenants. They both have their ups and downs for sure. But biggest thing with this is agents and lenders get taught that the VA loan exists and like the super basics, like 0% down, it goes through the VA, blah, blah, blah. They don't get taught the specifics. So you need to go to somebody who actually took the time to go through the guideline and learn this stuff on their own, which is hard to find. And that's why I keep going back to it. But if you click the link down below, you'll get an introduction to an agent lender that I work with in the area you're looking to buy. It costs you absolutely nothing. If you do buy a house with that agent, just for full disclosure, I'll get a kickback, but it'll be from the person selling the house. Whatever. You're not going to pay me, and so it'll cost you nothing to get introduced to an agent lender that actually knows what they're talking about, as opposed to one who like says they do but just doesn't want to lose your business, isn't going to tell you like, I'm the wrong person, I'm really not that great at this. you should probably go work with somebody who specializes. Like, no lender's going to tell you that to turn you away. Co-signers and co-signing, and why you should never co-sign for anybody, because it's terrible. And the risk you take for no reward other than saying, oh, I helped someone. It's like oh my gosh, it's such a, the number of people who have been ruined by co-signing for someone that they loved. Because the thing is, it doesn't matter that they have your best interest at heart, because the people who need you to co-sign for them are people who have proven track records of not succeeding in this instance. This would be like an Ironman athlete who has a really overweight brother. And the overweight brother is like, yo, I need this really attractive girl to date me, so I need you to go on a date for me. But here's the kicker. If she finds out you're not really me, they're gonna behead you. So like, you're just gonna have to keep pretending and hope that you don't mess this up. No big deal though, because like in the end, I'm eventually gonna lose the weight, and then we'll just be able to switch places. And if that works, nobody will ever know. And if it doesn't work, well, I won't get in trouble, because they'll never know I existed. So, like, I know that's a terrible analogy, but like, dude, there's no reward for the person who's co-signing. Like, there's not. They don't get anything. They're co-signing. But the risk is there. They take all the risk. Anyway, so I'm going to show the clip that I made about why this is bad. And then I'll show the clip. And for reference, this is not me just saying I'm going to go tack ADPI and active duty passive income and whatever. I make these videos all the time where I don't want to say like fake guru math, but that's kind of what people are calling them, where I disagree with the logic behind something, and I'm going to point out why. Here's why you should never co-sign, and it's going to hurt. Rip the Band-Aid. Look, I don't care how much they love you. I don't care how much they have your best interest at heart, because yes, it doesn't matter. It could be your girlfriend, it could be your wife, it could be your mommy, your son, your grandparent, your pastor, I don't know. Anybody and everybody who you think is the one person who loves you more than anybody else and would never do you wrong. It doesn't matter. That's the problem. The problem with co-signing is that it doesn't matter how much they love you and how much they want your best interest and have your best interest at heart. Because if they make a mistake, it's on you, right? So think of it this way. If a bank wouldn't lend to you, why should someone else, right? Like, if a bank wouldn't lend to them, why should you risk it? And the problem is that if you co-sign for someone, no matter how much they love you and have your best interest at heart, if they default on that, or mess up, or get in trouble, or get hit by a car and don't have insurance, or like something that's unforeseen or whatever goes wrong, it's on you and you're going to get stuck with it. So the risk is not worth the reward. You stand to gain nothing. By co-signing, you gain absolutely nothing. You have no reward, no benefit at all to co-signing. But you have a risk. It's not worth it. The name of the investing game is not to gamble on risks with no rewards. It's to bet on things with massive upsides and minimal risks, right? So don't co-sign. All right, so there are my thoughts. Now let's watch the video and react.
Hey guys, Mark Yancich here with ADPI, and today we're going to be talking about how to use a cosigner to buy a home with your VA loan. Have you ever thought to yourself, man, I want to invest in real estate, but my credit's just not good enough, and I don't know that I'm ready to take on this much debt?
Okay, let's stop it right there. If that's you, the right answer is work on your credit, work on your risk aversion, because guess what? If you want to invest in real estate, you're going to have to take on debt, and you're going to want to improve your credit. It's how you invest in real estate. If you want to invest in real estate without improving your credit and without taking on debt personally, be an LP investor in syndications. Be a private money lender. Find a way to invest in real estate where you're not taking on a mortgage and you're not doing the things. But that way is not buying a house. Because if you buy a house, you're going to need credit and you're going to need debt. Unless you're doing seller financing, then you might not need credit, but it's still going to have debt, right? The seller financing. So like, this isn't a have a cake and eat it too thing. Like you need to have credit and debt. Like, again, as I've said throughout all of my investing, whatever, your finances need to be in order. If you do not have your finances in order and you think that buying more real estate to get your finances in order is the answer, you're setting yourself up for failure. Take the time to pause and build that foundation, then go in on real estate. Having bad credit, terrible debt, not being able to take on more debt, bad financial foundation, and then buying real estate in hopes that it'll fix your foundation is setting yourself up for failure. It's just not a good mix. Sorry.
Well, that's exactly where cosigners come in. So if you're someone in that...
For the reference, this means bad credit, don't want to take on debt. Let's ask somebody else to say, hey, my credit's bad, I don't want to take on debt. Can you take on the debt for me and sign saying that my credit sucks so you're good with covering for me? Yeah? I'm going to have the house, I get the reward, you're going to take the risk, so if I default, it's on you. Cool? Yeah, we're good? Cool, thanks.
A cosigner is just somebody that basically lets you use their credit. You can even think about it as if they are loaning you their credit. This might be extremely beneficial for you if you're someone who either A, has bad credit or is in a bad financial situation in general.
Again, shouldn't be.
Now, you don't want just anybody to be your cosigner. You want it to be somebody that you're comfortable with. And here's the 3 things I would typically look for if I were you. 1, make sure that it's somebody just you trust, like point blank. 2, make sure they have good credit, duh. And then 3, make sure that it's somebody that they genuinely want to help you, okay?
For reference, the person in this scenario who should actually be doing the vetting is the cosigner. The person who's getting cosigned for could just run around screaming, will somebody please cosign for me? Because anyone who says yes, there's no risk for the person being cosigned for. Once they sign that, you're good. You can basically do whatever. The person who's co-signing is the one who needs to do the vetting. That's the person who's going to get stuck and screwed if this goes south.
Be begrudging you or asking you a million questions after this all happens. Now, the reason why you want it to be somebody that you trust is because they are going to be providing their own financial documents to acquire the loan for both of you, essentially. And they are going to be assuming the loan if you default on it or if you stop making payments. Guess what? The buck stops with them. They are ultimately the ones responsible for making sure the payments continue happening. So let's just break down the benefits of a cosigner. First things first, you might be able to get approved for the VA loan that you are eligible for.
Note that he said making sure the payments still happen. He omits, and I know this is not his intent, because maybe we get to it in a minute, but omits, it makes it, when he says that, what he means is if they don't make those payments, that's the person who takes the ding on the foreclosure, right? You both do, but that's the person who gets screwed, right? They didn't buy the house. They didn't get the benefit. They either make the payment or they're signing to help you ends them on the foreclosure as well.
Which is huge. That's a very, very big benefit. And secondly, a cosigner might help you get approved for a larger loan. Now, I'm not talking about getting into debt, bad debt on a bigger loan. I'm talking about actually acquiring more good debt because you're buying a home that you can potentially house hack, or it's going to have a big return on investment when you make it a rental down the road, all those types of things. So
again, that only makes sense if the property itself actually makes sense. The idea that you couldn't qualify for the loan, somebody else can help you qualify for the loan via co-signing, therefore it's good debt just because it's a house. There are ways to do it without a cosigner. Again, if your finances aren't ready to buy a house, then buying a bigger house just because the numbers might make sense down the road, I don't think constitutes good debt. Sorry. I think that if you're not ready to be buying a house and the bank is not willing to lend to you without someone else's signature, then you should probably just hold off. You can house hack without buying. I house hacked a rental. I Airbnb arbitraged bedrooms and lived for free basically in San Diego and pocketed my VAH. It was great. And I could have done that with no credit and it would have been awesome.
This is where like the long game can really be beneficial. All right, well, what's the difference between a cosigner and a co-borrower? Well, now that you're pretty crystal clear on what a cosigner is, I want to go over what a co-borrower is, and I want to make sure that you do not get confused between the two. Here are the 4 main elements of a co-borrower, all right? 1, a co-borrower is when both of the borrowers are making the payments, or basically pay on the loan. 2, it's a mutual application. Both of you are applying for the loan. 3, you are mutual owners of the property. And 4, this typically is when it's like a spouse or partners. This is when you see it the most often. Now, if you watch this and you're like, okay, I really want to do all that, but it seems like it could get hairy if I'm not careful and I need a good lender and agent to walk me through, you're absolutely right. You always want to have people that actually know what they're talking about, especially with the VA loan.
So this is basically a 3-minute video that says, hey, if you have no credit and bad finances, then we're going to make a video. It's a 4-minute video, but whatever. Hey, we're going to make a video for people with no credit and bad finances to teach them how to convince people to co-sign for them. And then, I guarantee the last minute of this is them pitching their lenders and agents so that you can come, shameless plug, use their team to convince people to co-sign for them. Just don't. I mean, don't get me wrong. Like, oh, shameless plug, I know agents and lenders too, and I'd be happy to recommend them to you. But my agents and lenders would hopefully tell you that you should probably fix your credit and work on your personal finances before you look at buying a house. So for one, I'd prefer the co-borrower idea to the co-signing. My buddy Donnie and Adit, they co-borrowed together. One of them had used his entitlement and the other had entitlement, and the one who had entitlement couldn't, his income was huge, but it didn't have the 2-year requirement, so it didn't count, and the other one met the requirement for income, so they were able to combine, bought a fourplex in Imperial Beach, made a ton of money, crushed it in the San Diego County area, and they were able to do that together with one of them having entitlement, one of them not, one of them had the other one having income and not, and they came together, bought a triplex, I guess, actually, and crushed it, and that was awesome. And so that's a win-win co-borrower, both risk, both reward, boom. Spouses, co-borrowers. I mean, there are some really awesome situations where co-borrowing is just a great way to be. Every now and then you hear of a situation where people co-signed and it was great. But I think for every one time that I hear about that, I hear about 8 to 10 times where it goes really, really bad. I mean, it's super skewed, right? And I'm sure that means there's probably a few times where it goes right and nobody says anything.
I am coming from a seller's point of view and why it is so important to have a really good, solid agent. So I was trying to sell my Florida house. I listed it a year ago, and my house went through 2 agents before I found Dave. It wasn't budging. It wasn't selling. One of those agents told me to just walk away and foreclose. And when I was told that, that's about the time that I found Dave and I shared my situation. I was making 2 mortgage payments. I was trying to carry 2 houses. My Florida house isn't selling. I want it gone quick. And Dave made a really solid connection with one of his agents that's in his war room, James Lascara. So within 24 hours, I'm on the phone with James. James listens to my goals, puts this house back on the market. And within 2 days, we had an offer above asking. The buyer was cleared to close in 8 days. And then we closed, I think, a week and a half early. I mean, just absolutely crushed it. And I could not have imagined that was going to happen. So, I went from my house sitting on the market for a year, making 2 payments, 2 different mortgage payments, being told to foreclose, to making a connection with Dave and being out from underneath this house within 3 weeks with an above asking offer. I mean, I can't say enough. Dave is amazing. His people are amazing. His group is amazing. They're absolutely solid. I would highly recommend them. And I definitely know who I am coming back to when I'm ready to move again. Thank you so much, Dave.